Well, that's it from the news for me. Why don't we move right into our last segment there? And Queen, this is yours, the Queen's Court. We've been playing it now for a couple of months. Go ahead and set this segment up here, Queen. Explain what we're going to be doing here, and then you get to run the court. I have learned my lesson and not even tried to run the court, so you're up.
All right, the Queen's Court is where the guys will bring their picks, whether it's an investment, a trade, whatever it is for, they'll analyze it and I'll go through it and see if it's something I like. If I do like it, they do not get their heads chopped off. If I don't like it, they get their heads chopped off. Although Tim always manages to get his head chopped up just
frequently. Yes, I do. Frequently, I do. There are reasons for that. Linda was even pointing some of them out earlier in the chat, but
it's the mouth. That's the reason.
Yeah, it's
because you don't listen.
And it's the ears. That's
the mouth and the ears.
All right. I don't need the court jester over there lobbying for my head.
It's the ears like this.
You see, the only person quiet right now is Mark. Mark knows. He's learned.
Yeah, but I'm done. I already did my Walmart. I'm past.
So who's first?
You go first.
All right, I thought through this quite a bit. I actually, went through all the Berkshire Hathaway additions through his 13F. I was thinking about maybe even, pitching something conservative like that Kroger, where he did buy up a bunch of that grocery store. But the more I walked through the market, and I really did a thorough analysis today here for you, my Queen. Now, there's no doubt about it. I went through sector by sector by sector, thinking about where the strength is, thinking about where the opportunity is. And nothing really grabbed me. There's the traditional energy plays, you bet. We could do ExxonMobil or XLE breaking out. I think those are in good spots right now. You've got strength in industrials and materials, but I brought Caterpillar for you last week, and Cat kind of held that breakout zone. Didn't want to double up on that. Want to give the Queen some variety. So my pick today is in the gaming space. And Mark, who's the best gaming company in the marketplace?
Well, I mean, if I don't go Activision, I'm not going to be very happy with myself right now. So
here's Activision. Absolutely. Look at this chart here on the weekly chart. It's a beautiful thing on the weekly. There's even some interesting data on the daily chart. Number one had earnings just a couple weeks ago, and they posted that earnings report, and it did come down into the support, the 200 period moving average. Activision's a wonderful fundamental company that tackle trading we've talked about for many, many, many years. Coach Matt has had it on our Tackle 25 list for, I think, the better part of 6 years, more than half a decade. I know that. And here we are on a stock that really hasn't participated in much price appreciation this year. We opened the year around $91. Here we are at $94, And when you look at the chart, Emily, broad support for 5 months that has held. Price responses off of earnings that could have weakened, could have broke down on the chart, did not. Played defense, found support, fired back through some moving averages. It's even up 2.5% here today, pushing towards a little tiny bit of a pivot point. But I'm not setting this one up for a swing trade for you, Queen. Now, that's not what I'm seeing here in the chart. I love this one long-term through the year for covered calls. You can play it on the breakout as a position style trade. You can wait for clarity to get it past $100 if you really wanted ultimate confirmation here. I actually think there's a little trade here, entry point just right above 95.5. These little pivot consolidation that it's in right now, showing me a little bit of defense, showing me battle back. And here's some information for you, my Queen. I love Activision's suite of video games, and they have one of their most popular franchises releasing a new expansion right now. So the gamer community, I could just tell you this, is fired up about the new World of Warcraft edition that is coming out. That is a huge franchise for Activision. Great news here today, good sentiment behind it, technicals that are supporting it, and oh, by the way, cherry on top, wonderful covered call candidate. Queen, Activision today.
I'm running numbers. Give me a second.
Sure.
I'm looking to see if the covered call is actually going to give me the ROI that I usually look for. I like it. I actually like it, and it's basketball. Playoffs are starting today. The Wizards are in the playoffs. Hopefully, they win tonight. You can't go wrong with gaming this week with the Queen. It's all about the playoffs, and the Caps are in the playoffs. I absolutely love it. The ROI on it, if you were doing this in a Roth or an IRA, is about 2%. So it's going to be about what, 4 if you did this on a margin account. And again, that neutrality is really good for covered calls. I like it. Good pick.
Thank you.
Can't veto Activision today. It's Warcraft Day.
I'm not even going to try to.
You want to talk about the army of offended people?
Oh, good Lord. No, you guys with Warcraft are like, the Tesla fanboys. I can't even go there.
All right.
I can't even go there even if I wanted to. But no, it's a good pick. I actually love it.
Thank you for keeping my head intact here today. All right, Mark.
Am I up next, your queen?
Yes, you are.
All right, about 10 months ago, I made an audacious statement here on the halftime report. And I said, I would rather own this company than Apple in the next year. Especially when I tell you the company that it is, how that's ridiculous. And I wasn't saying I would think it's a better company than Apple. I didn't think it had better fundamentals than Apple. I thought it had a better opportunity than Apple. Even though prices nearly tripled, or about, maybe double and a quarter or double and a half since I made that statement, I still maintain that this company has a lot of room to grow. I still think there's opportunity. Let's pull up Cinemark, CNK. Now, when I position, trade, quasi-invest, love to have a thesis. Now, when you were coming into the pandemic, one of the first things I did was to evaluate in these need people epicenter stocks that were obviously going to get hit due to the nature of individuals not being able to participate. Airlines, hotels, casinos, restaurants, movie theaters. I wanted to see who had the healthiest balance sheet. I wanted to see who had cash to survive the pandemic. In the battle of movie theaters, and so I'd go through all that, and Southwest was very healthy in the airlines. And in the battle of the movie theaters, it was a no-brainer. AMC had real structural debt problems, which has manifested themselves through their selling of 100 billion shares. Cinemark was actually very, very healthy. Very, very healthy coming into the pandemic. So as the pandemic, and as March and April and May and June pass along, some of the companies in the epicenter got a lift. Movie theaters didn't. As Disney released their movies directly, there was this thesis out there amongst a lot of people, a lot of belief. Well, movie theaters are dead. People aren't going to go to the movie. I've never bought into that from a human behavior. I think human beings need social interaction, and I think the movie theater serves as an epicenter of one of those social interactions. But there was that belief that, hey, the Netflix, the streaming model is going to kill movie theaters. All right, and then plus, we hadn't got out of the pandemic. Well, we got a huge bump post Pfizer. Some of that price appreciation certainly occurred post Thanksgiving. Real healthy stretch, and it's taken some time and consolidated. Like I like to see in a stock after a real significant run. Well, there's that whole question of movie theaters and attendance. But we've had a movie released recently that I think serves as a huge confirmation at the box office potential of movies moving forward. Kong versus Godzilla, which I did not think was a good movie, did nearly $100 million box office North America and $425 million box office worldwide to this point. Huge box office numbers for the type of movie, especially when so many movie theaters weren't even open yet. And certainly so many individuals had still been hesitant to go out into that type of public setting. I think as more and more people become vaccinated, I think as more and more progress is made in that front, as more and more of the reopening, CDC recently released, you don't need to wear a mask in public in certain settings. I think we're making progress in that re-socialization on all fronts. And I still think we got room to run. There's not a lot of areas in the market, and it's been one of the reasons I've liked energy so much over the last 3-4 months, that I believe you still have room to run that haven't became stretched. I loved MGM, But then MGM eventually reached a point where I'm like, yes, no longer represents value. You don't have any of that easy upward mobility. I think you do. And I think with Cinemark, you're also interesting time from a technical perspective, in that you've consolidated in a very narrow range, very tight box, and you look at a potential trigger entry above that. So I've liked Cinemark from a thesis standpoint for the last year. Still like it, still think there's room to run. And for a cash flow perspective, premiums are still pretty healthy on it. So I present Cinemark to you, my queen.
Are you thinking naked puts? Because I remember you talking about naked puts on this thing forever.
I like naked puts. I like buy, selling covered calls up at the higher end of the range. I still like Cinemark from a position cash flow standpoint. I don't love it as much as when it was at $8, because I thought that at $9, I thought that just represented just a tremendous opportunity. But I still like it. I still like it, and I particularly like it from a constant cash flow perspective for the rest of the summer and year.
Your thesis is, on point. And again, I think I've said this like probably 4 weeks in a row now, how you just kind of go about, just methodically how you, pick your positions and your stocks. I am a go for a cash flow trade on this one. Naked put, probably even starting it off that way and maybe boomerang it if it does come down.
That's how I've generally been approaching systems.
Yeah. And and you can get some pretty good premium, even if you sold right at support and sold maybe that, what would it be? It would probably be
the 20 is
20.
Probably.
You could probably sell the 20, even maybe the 17 and a half, and still pick up some decent premium, but I'll probably be looking at the 20 because it's right at that support. I like it. I absolutely like this trade. Too bad I never put it on my watch list, because I just thought you were crazy at that time, because you were just, you were at the bottom of the bottom with all your penny stocks and SPACs. So I was really ignoring half the stuff you were presenting back then. But
all right,
I wish I took you seriously.
Doesn't Cinemark need to graduate to having something besides 2.5 point option spreads, though? It's sell the 20 or sell nothing.
It's sell the 20 or sell nothing. But for where it's sitting at.
I heard way too much patting on the back. He needs a back scratcher for all that patting on the back.
Well, I got a question. Did you even see Godzilla Kong?
First of all, he should be canceled for saying that about Kong. You don't get down with Kong and Godzilla hanging out, high-fiving each other and wink, wink, nod, nod. Let's kill somebody.
I'm just saying, if that did 100 million, I really
listen.
like Cinemark.
How much are tickets? How much are tickets now? Is it still $10 to go to the movies? I could take 5 friends if it's $10.
Girl,
I could sell the naked put and take 5 friends.
There you go.
If it's $10 still.
I like it. I like it.
I don't know. I have concerns at the 20 Delta contractors. You have to sell at support, not under support. You don't have the range that you're looking for. You really only have about 2 ATR ranges.
I mean, you gotta want to own it.
I think that is literally your desire here. We say that all the time. Like, you got to have a desire to own it. You're probably going to own it. So
boomerang style.
Yeah. I mean, I currently own shares that I'm selling calls against. I'm willing to boomerang it if it goes lower. I just think
I do not like the naked put here, like, at all.
I think I'm starting to figure this out.
I could see a covered call, but I'm not sure I like boomerang here. I just think you're taking risks to underneath 20 too much. And I think you could mitigate that loss by selling call options a little bit better now.
And the difference for me, Cinemark is a ride or diet stock for me. I mean, it is one of those, literally, if it goes down to 1250, I'm happy because I want to have it.
But yeah, you're happy because you can write 10 covered calls in that environment, just keep on cash flowing to offset the risk. That naked put clips 20 and you go down to 16. You're not happy about that. I don't care what you say about your desire to own it at 20.
So no, it's a ride or diet cash flow position for me. Has been for the last year.
Is the Queen on Trade Masters tomorrow?
She is.
Are we getting lenient judging here?
You want to go back and get your head chopped off?
You guys have hated Cinemark, and Cinemark has been A+, not even an A+ cash flow vehicle for the last 14 months.
Tim, do you want to get your head chopped off?
No, I don't. If I start talking more, I'm going to get my head chopped off. So we're just going to leave the Queen's Court here for this week's edition.